Hello, it's Big Cheds, and this is the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the idea of falling and rising windows. This is a Japanese candlestick term. Here's a quick AI overview, of course, for you to pause and read this on your own time. It is the same thing as a gap in Western TA or classical charting, but in candlestick theory, it's called a falling or rising window. So I want to make a video on that. We see here move down. We see the candle close. We see the close here in the upper right part of the candle body. Opens up here, creating a gap, or in this case, a window. Here we have the price advancing, puts in the upper shadow candle, momentum stalling a little bit, bearish move down, and then the gap down. We see the difference between the low of the candle and the open of the candle. There's no shares, no coins, nothing transacted. That creates a gap. Here's another example of a rising window. This is in the middle of the run. And then here's a couple more as well. Now, in this case, what's interesting, it shows you how the gap filled. And oftentimes the window will fill. So we see here the wick touch the wick of this first candle here, closing the window. That's the terminology in candlestick theory. You open window and you close it. And here's another one here where the price advances after the move down, and then the wicks here, closing the window. So the gap itself should be support and resistance. So if you have the price advancing, and then you have a gap up. This area here, the entire gap itself, in theory, should be support in this case, right? But really the bottom must hold. But if the price comes up, there's the beginning and then all the way down. But this is the most important point, which would be the bottom of the window. And the same thing, of course, is going to be true in reverse. I just hit Alt-I and reversed the chart. You have the price moving down. The price gaps down. We create this falling window. Now, sometimes, again, it will fill. So gap down, come back up, wick, fill it, and comes back down. In this case, it's resistance, and it's resistance right up to the point on the top of the window here. We'll go back to normal, and in this case, the example again, advance, gap up, price comes down, little wick, and then continues. You fill it, and now they don't always fill. It's one of those things where it really depends on the context. But windows, rising and falling windows, often will fill. So you can look for that as a trade idea. Again, the bottom of the gap in this case would be support, and in the inverse, the top of it would be resistance. So we have falling and rising windows. And this is for the Trading Encyclopedia Daily Education series on my YouTube, Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. Thank you, folks. Talk to you soon. Big Cheds out.